Every American needs $160 more per month to buy the basic necessities than just a year ago. In this episode, we're going to address Biden's tax agenda, which hurts middle-class America. This is not a political agenda, but I'm going to share with you why some of the proposals are hurting so many lower income and even middle income Americans. So, my name's Doug Andrew, and I've been a financial strategist and a retirement planning specialist now for more than 48 years. During that nearly 5-decade era, I've helped many people prepare for a comfortable retirement by helping them optimize their assets, minimize taxes, and empower what I call their authentic wealth. And so I've seen many different tax situations depending upon who is in control of the executive branch or the legislative branch, because when Congress meets, depending upon the legislation, what they're doing, if they like to pass a lot of government programs that usually cost more money, they have to come up with more tax revenue to fund that. This is nothing new. And so what's been happening recently, I have a lot of people asking, Doug, so with Biden's tax agenda, what's your prediction? Why is this hurting the lower income and middle income people? Because, you know, he made it clear in his campaign that he's out for the little guy. Well, that's unfortunate because many times I've realized that politicians generally do not understand economics. Many of them have never even run a candy store before. And so when they have all these ideas on implementing Medicare for all, or free college tuition, or forgiveness of student loans, or stimulus spending, and so forth, they don't realize that if they just raise taxes on corporations or the wealthy, that it actually hurts the little guy. So let's get down to the simple basics to help you understand what happens when you spend way more than you bring in. If you were making $100,000 a year and you were spending $200,000, $300,000, or $400,000, I mean, people go, what? Who would ever do that for very long? The government, because the government has been collecting in tax. Just a few years ago, about $3.5 trillion was their annual income. And then it went up to 4, and now it's about 5 trillion. So let's just round it. It may even be approaching 6 trillion right now in revenue. At 5 trillion, what basically has been happening is they've been spending double that just in the year 2020 due to COVID-19. They had to hurry and shell out a whole bunch of money in unemployment benefits and what have you. And so they basically spent double what they brought in. Now, that's pretty bad, but under the Biden administration, with all of the additional packages that they have passed and that are pending, we're talking about going triple to quadruple. I mean, how can we do that? Well, there's 2 ways government tries to cover deficit spending. One is by printing more money, and 2 is by raising taxes big time. And if you haven't noticed, Biden is doing both of those things. So let's just talk about why this hurts middle-class America, because, again, politicians say, oh, no, we're just going to tax the rich. Well, and then why is it so hard to make ends meet right now? Are you ready to understand some basic things that, unfortunately, a lot of politicians don't understand? So, in a nutshell, President Biden wants to raise income taxes, and he says, well, it's only for the higher income earners. Well, yeah, under the Trump administration in the year 2021, a single taxpayer did not pay the highest tax of 37%, except on income over about $523,000. A married couple, it's on all income combined over about $623,000. And you went to a 37% federal tax rate plus 41 out of 50 states has a state income tax. Biden is lowering that threshold down to $400,000 for single taxpayers and $450,000 for married couples filing a joint tax return. And he's raising the tax from 37% up to 39.6%. Now, that means he's going to force people who make more money to pay a higher rate sooner. Now, some people say, well, that's just the higher income earners. They can afford that. We're going to just tax the rich. Well, in addition to that, and who are those wealthy people? They're usually the business owners. Now, he's increasing the corporate rate from 21% up to 28%, and people say that's just 7% higher. They can afford that. No, they can't. See, there's a lot of corporations that operate only on 2 or 3% profit margins. And so when a corporation is forced to pay $280,000 on every million of profit instead of $210,000, that's 33% more. They can't just afford that. They're forced to either lay people off or switch to automation because they can't afford hiring or employing people when they can automate, or they raise the price of their goods and services, or they do both. Who does that hurt? It hurts the middle income and lower income people. They lose their jobs. They may keep their job. They may even get a raise. But it's all gobbled up in additional costs of living because inflation, when you print money. Now, how much money is Biden printing? About $100 billion a month. That's 1 trillion in 10 months. That is 20% of what the IRS collects. They're printing that. It was supposed to be temporary, but when the Federal Reserve met in April of 2021 and again in the summer, they said, let's just keep doing it. And so they're actually causing bigger problems. But we're talking about taxes in this episode, and the solution actually will also eliminate the danger of inflation. Because I'm going to give you a solution here at the end of this episode to show you how to protect yourself from taxes going through the roof. You have a state tax. That's sometimes called the inheritance tax. Biden wants to be there when people die because tax revenuers love to tax people that are 6 feet under because they can't complain about it. Now, the inheritance tax usually isn't due until both a husband and wife pass away before money goes down to their children. And it looks like he's cutting in half the exemption because a married couple could actually split that up and go to almost 24 million. Now it's going to go down to 12 million, 6 million for each. And some people say, well, they can afford that. Well, Biden wants to take, instead of grabbing 40% or 46%, he wants to take up to 67% of everything your parents leave behind. He wants 2/3 of that possibly because money's crossing the table. He also is raising the capital gain taxes because whenever money crosses the table at a title company, when you sell a piece of property, let's say, that you've owned for 30 years and you bought it for $250,000, it's now worth $1 million, he wants you to pay the capital gain tax. He wanted originally to take that from 20% up to 39.6%. He got so much backlash that it looks like now he's saying, oh, we'll just gently increase it. We'll take it from 20 up to 25%. That's federal. And then there's another 3.8% on there, which is the investment tax. That's what came out during Obamacare to pay for that. And so federally, we're talking about 28.8 plus state. So you're paying that tax, and he's even entertained the idea of doing away with a step up in basis on long-term capital gains. He's put that off for right now. But see, what's happening is all of these issues actually hurt lower and middle income people. So let me make sure you understand why. But before I do that, let me ask you to please subscribe. This is called Three-Dimensional Wealth YouTube channel, and I have over 500 educational videos, but I'm so passionate about providing insights into opportunities that maybe you didn't know existed before that I post an in-depth answer to a financial question almost on a daily basis on this channel. It's free. And when you subscribe, click that little bell because you'll be notified every time I post a new video. You can click like, post a comment, share it with somebody who you feel ought to hear this message. And then at the end of this episode, I'm going to show you how you can claim your free copy of my most recent 300-page best-selling book. So stay with me. So when I started this episode, I said, unfortunately, every single American now needs about $160 more each month to be able to buy the basic necessities they bought just a year ago. Now, that's pretty serious inflation. And what upsets me is many times the government reports the CPI, Consumer Price Index, has only been an increase of maybe around 6%. That's why they give Medicare and Social Security recipients raises based upon the CPI. So Social Security just got a 5.9% increase announced this last week as of the recording of this episode, and it's the highest that it's been in years. Well, folks, back in the 80s, after the Carter years when inflation was 14%, the government says we can't afford to pay people the actual increase in cost of living on their Social Security benefits. Let's change the way we report inflation. And so they changed it from apples to apples comparison year to year to apples to oranges. And so basically they could choose to compare steak last year to hamburger this year if they want, if it's still red meat. And so when they report inflation around 6%, you can 2.5 times that at least. We have costs of used cars in the last year. The same car has gone from $21,000 up to $28,000. Cooking oil has gone up 60%, but even TV sets have gone up 8%, furniture 11%, and so forth. So what's happened is that people, consumers, everyday Americans, the lower and middle income Americans, who just sometimes live paycheck to paycheck, actually need an average of $160 more each month to buy the same gallons of gas, loaves of bread, haircuts, whatever that they bought a year ago. And most people, their raises have not been enough to equal that, or if they have, it's mostly been gobbled up because of inflation. So it really doesn't do much good to raise the minimum wage when the minimum wage increase actually gets gobbled up at the gas pump and the hamburger stand. Is that making sense? So this is why the tax agenda and printing of money actually hurts the people that most politicians say that they're out to protect. And I don't know if they get it or not, but it disturbs me because they are passing laws that affect people dramatically because they don't understand basic economics. Now, if you want to learn more about what you can do to protect yourself, your money, the hard-earned dollars that you earn and set aside, to be immune from taxes going up because it converts your money to be tax-free. How to have inflation work for you instead of against you. So that you can outpace inflation, you link your returns to the things that inflate. It sounds simple because it actually is, but you wouldn't believe how many financial advisors don't know how to do what I just said. And then to protect yourself from market volatility, because the market is going to continue to be very volatile, and I would recommend you get your money out of the market and participate when the economy is doing well, but do not lose when the market goes down. Sound too good to be true? You'll learn it's not. Here's how you can claim your free copy of this 300-page book that will teach you how to eliminate those dangers of taxes, inflation, and market volatility. It's called The Laser Fund. It's my 11th book. It's 300 pages. Actually, 2 books in one. This book is 200 pages, 14 chapters, with all kinds of charts and graphs and explanations. If you learn more by stories, you flip it over and read this one, 100 pages, 12 chapters, 62 actual client stories. And so this will teach you how to diversify and create the foundation for a tax-free retirement, and how to link your returns to the things that inflate, and how to not lose when the market goes down. You simply go to laserfund.com or click on the link below, contribute a nominal amount towards the shipping and handling. I'll cover the rest of that, and I'll pay for the book. Don't pay $20 retail. I'll gift you the book. And there's also options there to listen and learn, watch and learn if you want to do that. But once you begin to learn what you can do that's better, you won't be so concerned and lose sleep at night because of the tax agendas of various politicians and why it's crimping your lifestyle and why more and more dollars are required to buy even less than you bought a year ago.